Hey everybody, welcome to your daily update for SOL and BTC. So we've had a bit of bullish price action. So a couple of closes yesterday brought price back up into some key levels, 2-day, 4-day, that kind of thing. And we've moved between the supports and the resistances. I don't think we've quite completed the 5-day on SOL yet, but we did hit, I think, the 4-day to the cent and then bounce back down off that. So you might see almost a double top or something like that coming fairly shortly. Um, so looking at liquidity, it's pretty even, which we actually don't like because we're heading into a weekend. So if we're going to go into a weekend and liquidity is quite even on the 1 day, then it sort of means that you can end up dumping one direction and then hanging around and building up liquidity and then maybe going back the other way. But it's yeah, there's no real bias on that liquidity for the 1 day. If it was to dip, it would be back to the 176 sort of area. If it was to, on SOL, and if it was to pump, up to that 196, 197 area. So, which it may head to now, just to, like I say, complete that 5-day. For BTC, then yeah, anything up into that sort of 112 to 113 area, and we still have that lower liquidity that hasn't really been taken out yet, back down to that 108. If we look at it on the 7-day, 7-day would be slightly stacked towards the bulls. So people are feeling like this recovery is going to stick. They're opening longs. And there's definitely, like, looking at the BTC charts, to be honest, they just look like an absolute trap waiting to happen. It's a case of, will it reject? If so, where? But as long as the shorter term timeframes keep having positive closes, if they keep sneaking back up above support levels, then they'll just keep bouncing, and that's how some of those high timeframe candles can just travel up for quite a long period of time before eventually you get close to the end of the time frame and then they start to pull back. So just got to keep an eye on what the low time frame obligations are, and just keep taking trades on those. As far as that 7-day liquidity, if it was to dip, it would be down, 105, 104, 103 sort of area. And I don't know if I really like the look of this big area here up to the 112.8, because we know that there is definitely rejection structure that's sort of built in there. So whether or not they're just going to push up into that and then have a dump, very possible. And pretty much the charts for 7-day on SOL aren't really any different to the 1-day. There's down to the 170 something and up to that sort of 200 area. 204 is still the area that has the most confluence with various things that could reject on SOL. So, but we do have higher time frame targets that take it all the way up into those 240s or above. So we just, once again, just keep an eye on those low time frame closes. A couple of days ago, we had the 2-day that just crept back up above trend. We've had the 4-day, 5-day all just creep back up above their supports, and then they've bounced off those supports, and then that's why the price has kind of just been creeping upwards. And each day we just open a position, take a trade, make some money, move on to the next day. Okay, let's have a look at this 30-day. 30-day liquidity is a little bit more geared to the upside as far as taking shorts, but overall it's pretty even, really. It's not like it's completely flat on one side. Levels are pretty much the same, 103s, etc. If it was to go real deep, and I guess it's showing some of that stuff up to the 120s. So today we do have a close, or a couple of closes on BTC that can put it back into a range to target 120. So it might, yeah, it might be able to get all the way back up there. We shall see. Okay, let's have a look at these charts. Okay, so today we've got 1-day, 3-day, 9-day, 11-day, 27-day, 33-day, 99, and 297 we won't really bother about. Closes. As far as SOL BTC strength goes, it's pushed down into the whole candle. It didn't quite hit the body, so that's quite bullish. You know, if it ever bounces just up within this wick, it's usually quite bullish, um, and it's pushing up into the trend. So if it holds this sort of area for the next 3 hours, then the next candle can open on the other side of the trend, and that gives it the option of actually targeting the break level. And for us to see a reversal, we really need to hit at least a break level at some point, and that would be this 17671. Overall, looking at the charts, SOL is looking a lot more bullish than BTC, so it's not surprising me at all that this is trying to break out right now. Now, of course, if we do get over this trend and we push up, just because it hits a break level doesn't mean that it actually breaks a break level. So if it does strike there, then that's sometimes a good area that to take profits on any trades related to SOL. If it does end up breaking the break level and closing it, you'll generally get the option of being able to re-enter on the break level once it's been hard closed. So, but yeah, if it gets through there, it may just retest the prior broken trend, or it could even come up and try to hit that actual origin resistance level at 17933. If we actually hard close back up over that in the coming days, then it really becomes game on, because most of these break levels will probably just collapse and it'll head up to the upside. So that's what that's showing us. As far as the weekly goes, we haven't made our way back to the weekly trend yet, which is at that 1.8, and we're still just bouncing off the origin support. So overall, this is saying that we should just see continued strength for SOL. Is pretty much what this is saying relative to BTC. Okay, let's have a look at the safety assets. Okay, so failure to hard close over the top of the origin level, failure to hard close over the top of the trend. We like this. This is good for risk assets. Of course, we do have 2 hours and 52 minutes to go, and we've all seen how they can change this stuff in the last minute. But as it currently stands, the support level on the daily is still going to be this 66.72 level, which has been hard closed back here a couple of days ago. But being that we're going back under the trend, it becomes now a case of trend versus horizontal. And if the trend wins, this will break. If this breaks, then we get to go down here to the 66.24 level, where we will run into a range trend and the base of the range, and then we play the whole game again. So if there is a close today, if it does happen to sneak down, and this would be quite bullish for alts, but if it happens to sneak down below that 66.72 level and open the next candle, then you could get a direct rejection off the backside of that level, and then a push down, which would be that sort of pump for alts. So that's not looking too bad. Let's see what we're seeing over here. And the weekly is slowly rejecting off that trend, so yeah, that's not too bad. So there's nothing really to be seen there until end of week. All right, let's have a look at some totals. Okay, so the 1 day is pushing up on the range trend, so that's looking good. It's still... So this candle down here on the 22nd was the break of this range trend that's running up here. So if that was the hard close and we get over the top of this one, it's probably just natural that it's going to come back up here and try to test that 1.52 area, just because it's going to want to be retesting that range trend at some point. And it went into the hold level, so it's pretty much just doing exactly what it should be doing. Created a hold level, pushed down into it, trying to break the trend. If the next candle opens on the top side of this range trend, it should be able to push up here into that 152, so you might get another little bullish pump. And we're still holding the 1 day trend, so yeah, it doesn't look too bad. If they want to make this bearish in the next 2 and a bit hours, they're just going to have to sell this down and get this underneath that trend again, so that it can reject off the backside of the range trend and then target the standard trend. So, but we do, this is now a 1-day origin level down here as well at 1.43. So after creating 1.42, so it's kind of escalating in an upwards direction. The 1.42 was created as an origin level. It created a bounce. This is where strength has come back into alts more recently, and now it's doing exactly the same thing for 1.43. So if we do get a dip back down to the 1.43 level, particularly after closing above this range trend and maintaining the uptrend, then that would sort of be more like one of those sweeps of liquidity, and then you'd look to find a good entry on that and then push back up. Or alternatively, it's just going to open up here and come up here and target these upper levels. And they have rejected a few times previously, so it'll all come down to whether it can get above those levels and close the next day. And that's sort of what I mean by you just need to keep an eye on these lower time frame stuff, because some of the high time frame stuff says we're going to have a dump, and that dump can't come if these lower time frames just keep recapturing levels and then just pushing to the next and recapture and push to the next and so on. And eventually it will come, but the thing is, yeah, as long as it just keeps getting over these levels on a daily basis, then we're going to keep moving up. Okay, so let's have a quick look at that weekly. Yeah, so example being this, the weekly is actually under trend, the weekly is under resistance. The target for the weekly is to dump all the way back to that 1.38, but if the dailies just keep closing up each day, they will end up getting up over that 1.51 level. And if the daily can get over the 1.51 level before the weekly close, then there's no chance of actually hard closing or losing this weekly level. So the daily is basically trying to get its way back up. Okay, let's have a look from the other directions. Okay, that's for that. Okay. Yeah. So overall total market cap on the daily is actually quite bullish. It bounced off the wick of the whole candle, didn't even go down to the body. And so what happens today with this is that this 3.65 level, it becomes almost like a reversed rejection level. So it was a whole candle designed to send price down, but because we're actually going to close up inside here and on top of the range trend, and even actually recapturing or getting back up above the prior broken standard trend, it could just bounce from this and then keep on trying to push up to this break level up here at 3.8. So it's in a good position to continue going up and showing very, very bullish signs. Hasn't lost the range trends. Yeah, it's looking good. Bear case, obviously, is that they push it back down. They could push it back down under the prior broken trend. They could push it back down under the range trend. They could push it back down even under that 3.65 level if they really wanted to take a dump, and then that hold would kick in and send the price lower. So, but at this stage, yeah, looking kind of all right there. Versus the value of the Dixie, it's not quite as good. So we must have seen a little bit of a strengthening in the DXY, which doesn't show too much there, but must have seen a little strengthening in the DXY. But it is getting back up above some of the support levels. Yeah, the big air gap in these support levels is pretty much between about that 341 and that 346 area. So if they wanted this to be quite a bullish close, they'd push it up into that 341.22 or higher. Then it'd be above the range trend, it'd be above the support levels, and then you could see a weekend pump because we'd be in between these two levels here. Okay. And if we take stables out of it, it's above the range trend, it's violated the hold, it's back up above the standard trend. Any further up and it's actually back up above the interior trend. So, and that 3.44, 3.45 area gets it back up above that high time frame resistance. And again, that's that sort of air gap that you'd have up to that 3.54. So Yeah, it's looking pretty good. Um, Overall, if this keeps going, you should have quite a bullish close. And if they start to apply the sell pressure last minute, then guess what? You know it was a fake out, and you know that they were just trying to get you to go into longs, and that will change your idea of the direction. But yeah, at this stage, it's not too bad with 2 hours to go. All right, let's have a look at BTC. Okay, so although a lot of this so far has looked pretty bullish, or at least heading towards being bullish closes, BTC itself is actually looking a bit weaker. So we're still under the range trend. If it pulls back any further, it will actually be on the wrong side of two trends. It has rejected off the 112-ish level that we spoke about yesterday. And to really be bullish, it needs to just pick it up a little bit and close sort of over that 111.2 sort of area. One thing I'd be a little bit suspect on this is that we never actually went back to the whole candle at all. So this is kind of like creating a range off nothing. Nothing on the 1 day anyway. And it's, yeah, if it pulls back down just a little bit, closes sort of anywhere in that 110.4, 110.5 area, then it could just reject off the backside of this range trend, come back down and test this hold area. So so a minimum move therefore on the 1 day would be to dump back, at least $1,000 and head back to that whole candle there. So it just looks a little bit, BTC itself just looks a little bit weak and looks a little bit trappy, and alts have taken an absolute punish, recently. So it is just probably the market's bringing things back into balance a little bit. And but yeah, there's some pretty clear levels there to keep an eye on. Obviously, if it just has some magic pump and gets up above 112, 124 by the end of the day, then yeah, I'd expect it to head all the way up into the 113, 114 area from there. Okay, let's have a look at the 3-day. So yeah, 3 days still under the range trend. Sorry, under the interior trend. I had to manually put that in there. It got broken and then it got lost again. So it's still under that trend. It's rejected off it, but it is back up inside these horizontal levels. So if this plays out similar to the last few days, what would happen is it's going to come back down. It's going to test this 110 area, and then it's going to basically come back up to try and attack that trend again. If it gets really bullish, it means basically getting up over that 112 area, and then there's some pretty big air after that, just a nice big air gap. So this is sort of what I meant by we're really on the line of being able to push back to 120. There would be things like a prior broken trend and stuff that's running through it, like around 118, 119, that it could reject off, but it is right on the line of being able to push back up there if it just simply gets up over these trends. Okay, so looking at the 9-day, the last 9-day period never created the whole candle. This 9-day period hasn't lost the range trend, so this is actually looking a little bit more bullish, but it is still stuck under the interior downtrend. It's still stuck under one of the interior uptrends that it hasn't actually broken, so it's still got the ability to have a push up. It could hit the 115s, it could hit that 120 level is visible there again. But the 120 level's already had its first touch origin rejection, which is this big dump candle here. So yeah, it's really just compressed. So it's quite a tight little range for it to be compressed in, just in that area there. And all we're waiting for is this thing to break one way or the other. So 11-day. So 11 days just going to open in the middle of nothing, which is always fun. It has already performed a couple of things. So it's already performed the rejection of the 120s. That's good. It hasn't retested the underside of that trend yet, which is sort of up around that 119 area. So there could be a potential of a move up to there and a rejection. there is a prior broken interior trend it could retest, which is back to that 114, and then it could reject off that 114. And it could also, come back here to retest the bottom of the range. So it has recovered back into that range a couple of times now. So that's laggy trading view. That's sort of a retest of that 107 area. It's also on the wrong side of that prior broken trend. Just want to see where that got broken. Must be one of these little dojis. So let's just say we forget that doji exists and just put this back in here because dojis can be a problem. So that gives us that as a possible trend if these dojis are, say they are accumulation, not distribution, which means we are technically breaking that trend today if that is the case. And then a move down to the untouched trend down here would make sense, or even this level here, which is 100k roughly. So yeah, this is the tough thing, right, about BTC is you've got some short-term timeframes that are looking like we might move up a bit more, and then you've got some higher-term stuff like this, which is saying, yeah, we're going to go 106s, 107s, 102s, 100, or maybe even the range trend down here. It'll be the second time we've ever hit that range trend, but I imagine that would actually support the price and bounce it quite nicely. It may sweep it for liquidity, but yeah, this time frame definitely is looking like it could go back and hit that 100k area. Okay, this time frame is just looking like a trap, like a crazy trap. So based on the 27 day, it's the whole candle target is 99,981, and it's bounced off the prior broken trend. It swept slightly below it. There's nothing else really to support this unless you get down into this whole candle that's down the bottom here at about 96. We are going to hard close back up inside that 27 day potentially today, so that could mean this candle becomes like this level here at about 108 300, or even this level here at about 108 865 could act as support to then bounce up to the trend again, because it can invert it once you get this hard close in here. So but the other option is that it just rolls over, because we are underneath that trend and we still haven't broken any of this resistance. So this could play several ways. It could push up into those higher trends, anywhere from sort of the 114s to the 119 sort of area, anything up in there, and then it could reject. And if it does reject, the stop gaps obviously would be the fib target back under 100k, the trend, which is going to be under 100k, or the whole candle down there at that 96 sort of area. So that's looking, that does really look like it could just be another surprise dump or trap. Looking at the 33 day, the 33 day is going to hard close and lose an interior uptrend. So this again is one of those things where this yellow candle is not the hard close of that trend, it's this one. We're going to potentially get a hold level here as well. So this hold level would be, what's that, 112821, and yes, it could wick up above that level because it's just a single candle hold. It hasn't engulfed the wick, so it's kind of the weakest type of hold level, but you really need to be aware of it because the target for this hold level would be either this prior broken trend, which is going to be back to 108. It's going to be the hard closed retest at like 102, and that level itself has already technically had the retest in the wick of this candle. The level that hasn't been retested is this range trend down here, which was hard closed by this candle and hasn't had a retest yet, and that's down at 97, 98. And then you got the next trend. So if it just travels to the trend, and it can travel upwards to the next trend, that's what happens in bull markets. It can travel sideways to the next trend, and the price just never changes, then it bounces. But hey, it can also travel down. So if you've got a hold level and you've got retests already performed on your trends, they've already been performed on your break levels, the untested support levels for this thing losing that trend are going to be lower, certainly lower. It will move to there. What's that going to give us? About 102 back to... So you might get a swing in here. If it drops first, hits the new trend, you might be able to get a 102 back to the 112. If it goes up first and then dumps, it'll try to break the trend, or it could dive the trend to perform the retest of these lower levels. So yeah, this is looking like a trap. So far, basically, 11-day, 27-day, 33-day, all looking like traps. So let's have a look at the really big stuff, 99-day. It's just kind of in the middle of nowhere. So this is a bit tricky to try and figure out, this one. The support trend's good. We know we have support if we go under 100k. We know we have support. We have a prior trend down here to be retested potentially based on that anchor. However, if we look for different anchors, we may be opening a candle on the wrong side of that or just above that, therefore could bounce. Then we have like a 142 retest. We could be working off this anchor. This means we haven't actually tested the top yet. We could push up to a blow off top anywhere above 130, through to sort of 144, could be a blow off top, and then a dump all the way back to 93. And that there anchors the same as that one back there. And same. So yeah, some of the real high time frame stuff, because trends can differ quite a bit. One way it basically says we're looking at a dump and then a bounce. The other way it says we're looking at a blow off top and then an even bigger dump. So it's that's all that's showing us. All right, let's have a look at SOL. Okay, so the 1 day is just sitting just above the range trend currently. I don't like that it hasn't tested this whole candle. So when you hit a range trend, typically you're going to come back to the whole candle. The reason for that obviously is that this is a 1 day time frame, whereas we did close back up inside 2 day, 4 day structure yesterday, which gave it the ability to bounce. We also had a really old, it goes all the way back to here somewhere, really far back. We also had this old April 2024 1 day level, which it snuck back over, and so that kind of helps it as well. But really, it would be a bit more healthy to see this thing at least pull back to that whole candle, even if it just wants to be bullish and touch the wick and then bounce. But what could happen today is it could actually just close over top of that range trend and go again to try and test the upper one. So that would give it a push back into that sort of 199, 200 area. And when we look at the next couple of time frames, that looks like what some of the higher time frame stuff is trying to do. So for it to become bearish, pretty easy for it to become bearish actually, it's just pulled back down under that range trend. All it has to do is close down under that sort of 192 area, and then it could bounce off the backside of that range trend and come down to test the hold. That gives you sort of like a daily move, and then you could either long the hold or you could short the range trend back down into it. Although just be a little careful, because sometimes you're taking a short on the daily and you're shorting this range trend, but what you don't know is that sitting in here you've got higher time frame levels, which means that short might stop short. If that, say that 10 times fast. Okay, let's have a look at 3-day. So last time we had a 3-day close, I put these circles on here and I said, look, buy down here and sell in these circles. So if you followed that, you would have not quite got the absolute bottom entries, but you would have got, 1, 2, 3, and be up in profits now quite nicely. So it looks like it's going to try and create a hold level. It looks like it's going to try and close over the top of the older support. So if it's going to be on the wrong side of the trend, it hasn't retested the prior broken trend yet. So those levels are sort of everywhere between 197.8 through to the low sort of 200s, like 200 point something type levels. So it may give another little push up into there. And the one probably just to watch out for really, like first rejection on this time frame would just be that 197.8 level. And if it pushes up any further than that, then yep, be taking TPs along the way just in case it rejects. And then it will hit the range trend again. There's a couple of different range trends up there, but certainly if it gets anything above 204, just don't be greedy and make sure you've taken something off the table and set yourself a stop loss back down here where your entry should be, and then go from there. But little circles did the job. Okay. Looking at the 9-day. So 9 days bouncing off the trend. It has already hit the wick of the hold, which is that 197.872 area. If it continues up, the next thing it's going to try and hit is 200.70. But it also looks like it's getting compressed inside this area. And if it closes down today or blue today, it's going to be a hard close of that range trend. And that's where things can get a little bit bearish, because if it hard closes that, it might push up, reject off the underside of it around that 197 area again, maybe push through it into some kind of resistance up here, and then perform a rejection back down to the 190s, the 189 sort of area at an absolute minimum. It hasn't lost the uptrend, but closing blue today on this time frame does mean it loses that one, which it's a pretty old trend, but it's kind of far away. And it could flip bullish by the end of the day, get back up over 200. We've seen stranger things happen recently. Or if it can actually close up over that 197.8 area and be back inside that range today, then it's going to challenge the hold and then try to break through the 200s, where it's going to run into some pretty solid resistance. So, okay, looking at the 11-day, it's closing back up inside support. It's quite a way away from testing the trend. It's not moving any trends. It's not breaking any trends. All that's really saying is that it hasn't lost that 187 support. So that's good. So it could dip, and then bounce back up. But it's looking a lot more bullish than BTC. The hard thing about trading SOL right now is that it has, for several days now, probably even a week, looked a lot more bullish and a lot stronger than BTC. So if BTC does take one of those good old famous dumps, yes, that's going to bring this down as well, but it's the chances of this bouncing back from it so much better is higher. So, okay, and this is our first sort of bearish time frame. So when we get to the 27-day, if we close under 200.579, then we are creating this hold level. If we close where we are now, then we are opening on the wrong side of the trend, of the range trend, and then that could invoke a dump back down to test the prior range trend, which is bullish in a way because we haven't actually lost this range trend from back here in March. So that gives us a target down there of about 174 again. And of course, if they want this to be bullish, then all they really got to do is push it up above 200.579 for the day, which could happen. Got a few hours to go. And if they want to be kind of tricky, it's get it up enough that it opens on the top side of that range trend, but under the hold level, and then you'd have a little fight. It would become sort of a compression situation. And a close anywhere between 203, anywhere between about 203.3 and 200 would create almost like a doji candle that could be closed up over to create a new hold in the next 27 days. So that's possible as well. But yeah, as it currently stands this time frame, you'd have to label it as bearish if it was to close exactly like this. It's going to close on the wrong side of the range trend with a hold level, and that typically doesn't end well. So those lower time frames that look bullish, they would most likely play out first. You might get a push to the upside, bit of a liquidity grab, and then somewhere in that next 27 days, it rolls over and it dumps, because of this structure here. So that's kind of what that's saying. And the 33-day is kind of opening in the middle of nowhere. It is creating high time frame rejection at 247, and that I find quite interesting because we have a bunch of other time frames that are pointing to 247. So if it actually goes to 247, then that would both be a high time frame rejection based on this, but it would also be a target based on those other time frames. So yeah, we might see some kind of rally up to there. Next really positive news event or whatever might push us all the way up there based on things that have already closed. The 189 level, as an example, the 189 level actually points to 247, and if we hit 247 after closing this candle, then it's going to be an origin rejection and then potential dump. It's also roughly the backside of the prior broken trend. It's also roughly the reverse of the current uptrend that we're on the wrong side of now, and it's also a range trend. So there's a hell of a lot of reasons to reject if we hit that 247 or above area there, and which kind of leads us to this, which I think is probably going to point to, funnily enough, 247. So this is a backside hold candle. If we close here, it's just another time frame that is pointing from 189 to 247. So given what you've just seen, given that this is a 99-day time frame, it can push straight through this trend like it did on this last wick and hit that level, and there is rejection in that level, and it could push it back down again over that next time frame. This is also creating high time frame resistance at 259. So yeah, there's an influencer at the moment who generally gets things pretty right, and he keeps on posting that every pump at the moment is a trap, and I guess like at the end of the day, yes, altcoins are not the kind of thing that you probably are going to retire on unless you get in and out at the right times, but this is definitely set up to do something like that. We've got things pointing to this level at 247, and we've got a bunch of resistance getting created at 247. So you can see how it's done it once already. Next candle could just do exactly the same thing, until it actually closes back up over the top of these trends and then flips them into support. If it's building resistance at a level and it's got a target pointing at a level, then it's generally a case of let's push into it and reject. So that's pretty much what that's saying. So yeah, looks like we might get a decent weekend pump if we close right. If we close wrong, then obviously you're going to get the opposite of it. Key takeaways is probably watch out for things like 247 if we ever get there, particularly if we get there and everyone is mooning and bullish and so on and so forth, then definitely be taking profits. And just something I talked about in the Discord today, which I think is worth thinking about, the way this market certainly appears to be changing, is just look at making a small profit every day and compounding it rather than trying to stay in a trade for a really long time. And just the reason I say that is that, you've the range that the price is in, just say on this one time frame, you've got an origin rejection level there at 259. You've got an origin support level at 109, and you're basically in the middle. Now, if you open this trade and just leave it open and you do not take profits along the way, there is just as much chance of this going down to 109 as there is to going up to 259. You could get to 259, feel like it's going to go forever, and it could reject 259 or even 247 and then head all the way back to 109. And if it rejects 247 and goes all the way back to 109 and you'd entered at 193 and not taken any profits along the way, most people would be in a pretty unfit mental state, depending on how they valued that money. There's so much volatility now, and there's some big players in this market now, and that huge flush we had on the 10th of October, like, one of the key things is that money doesn't disappear, it moves hands. So the people who won on that, and whether they're insiders or just good traders or whatever, all the tin hat stuff gone. The money is not liquidated from the market, it moves to other people. So now there's some really big accounts, really big money in the market, people who can move price. And you've got these huge ranges. It seems like there's just, one tweet a week that either sends it flying or sends it, up to some upper resistance really quickly, or it sends it down to some lower support really quickly. And all of the levels that are on these charts are being adhered to. It's just, you might get 2 days of nothing and 2 minutes of huge wick. So just, it's if you don't have a lot of time to spend watching the charts, it's almost better just to say, cool, right, how much do I want to make today? What trades could I take today? Are there any trades even worth taking today? And then you get in, you get out, you treat it like a day trader, and you just compound the money. And if you do that over a longer period of time, it's probably safer than just trying to stay in the market and bet on one leveraged play right now. Different if you want to take spot bets, obviously. And I think personally that the level of greed in this market now is so big that we should see higher highs. But we could also see those higher highs reject faster than we've ever seen before. And so if you don't get your timing right, then you can end up backwards pretty quickly. So yeah, other than that, pretty much short-term bullish, cautious, watching for a trap. Let's have a quick look at Tesla. It is Friday, so probably not much is changing. So Tesla rejected off the trend again, closed under it. So this is basically, I should just go into Tesla predictions. This is what we said yesterday or the day before, I can't remember now, is that if we close with a wick up here, then the next candle can just open, reject off the trend and go back down. And because the hold level has already been tested, it's going to have to go to something else, which in this case is the range trend. And here we are. Our next candle could open on the wrong side of that range trend, underneath the prior downtrend. It could reject off that and then have to go lower. So just keep an eye on how this opens. If it opens back up above these levels, it's probably going to bounce. But if it opens below, then it's probably going to reject. And that's and that will be next week, I guess, now, because Monday to Friday thing. But yeah, it's funny. The more I look at this stuff, the more I kind of think, like, all these key influencers who, well, let's just say Marty, who continuously complains about the manipulation and the crypto markets and et cetera, et cetera. And it's just like, this is not crypto, this is just a stock. And it just does exactly the same thing. It makes trends, it makes hold levels, it bounces, it makes range trends, it's got origin levels, and it just bounces between them, just like every crypto does as well. So if crypto is manipulated, so is this. And yeah, signing off. Like, subscribe, and all that other stuff. And we'll catch you again on the next one. hopefully we get some kind of exciting weekend this weekend and some kind of price action, but who knows if we don't and it's boring. Then I guess yep, we'll be we'll be sitting there sending out tumbleweeds and little memes of kids spinning on chairs. All right, catch you later.